so much with this shit.
Yeah.
But the thing that I learned, bro, is that with Forex, bro, with those pairs,
Yeah.
is that we're taught these setups. And like the problem with Forex, bro, is that price gets manipulated, bro.
Mhm.
Like honestly, bro, it'll be a perfect head and shoulder, and it will still like be at a level to where this is, I gotta show you. I just have to show you. Like I was in CAD JPY like a few months ago. This is what really fucked me up. I was in CAD JPY, bro. Price was, I mean, it bought hella, bro, overbought, and this is even back when I was using indicators. I was using the RSI and the ref, relative strength index, and bro, that shit bought so much, bro, and it formed a perfect head and shoulder, and it went down a little bit, and it basically hit like my god zone or my gold zone. I have to show you on my screen, but hit my gold zone, and it just shot up, bro, and I lost like shit $1,000. I was so
Hey, check this out, Zig. So when you said, I'm glad you said that. You said the market is very manipulated. So check
oh
this
yeah,
out, bro. Bro, I mean, we got stuff called the, market providers and market makers. You know what I'm saying? They know the retail education up and down. So I feel like, when you seen that Head and Shoulders, and you was like, yeah, this mug about to shit, this mug about to shit, you know, bro, a lot of people was in that same pool. So it creates a pool of liquidity. So when these market makers, when you see that shit get manipulated, just think about hella niggas MT4s just getting hit, you getting wiped. You feel me? That's bonuses. That's bonuses for the market makers. You know what I'm saying? Otherwise, when it's moving in trend, that's just them recycling the bank's money. Now, they also can recycle the bank's money with retracements as well. But that's a different story. But like the stop hunts and stuff like that, it definitely manipulated. They'll be like bonuses. And also it's a zero-sum game. So where somebody is making money, somebody is losing money. It has to be polar opposite. That's just one of the laws of just the world and the universe in general. Where there's buyers, there's sellers, you know what I'm saying? Where there's black is white, it's contrast, polar opposites. So I mean, just going back to what you said, it's like two sides to it. I know you probably well aware now,
oh
but
yeah,
you and the dumb money. The smart money just always capitalizes off the dumb money. You know what I'm saying? And when I say dumb money, I don't mean it's not calling nobody dumb or anything. Dumb money is just simply really
smart with money.
and you know, straight up. So I mean, also based off of risk to reward, because you got to realize these market makers, they got quotas to hit as well. Every month, every week, they got certain quotas to hit, and they got to drag out. And that's why all the banks work with each other. You got the Asian banks working with each other, and mind you, you got brokerages across the world who are working with these market makers, because the market makers are data providers, so they are automatically meshed up with the market makers, and they get that pool of liquidity, that pool of data, that says it's probably about $100 million sitting above this Head and Shoulders. If you come stop this out, boom, that's probably $100 million in bonus. Just certain stuff like that, like just be pools of liquidity, risk to reward. They have to balance their shit out too, just as we do. So when we think like them, or not even like them, when you just think of it, like we were saying, as a business, that's when you get on that same frequency that they own, because everything is frequencies. So I mean, when you own that, you're the smart money, you're gonna be on that. You gonna be on the good side. You know what I'm saying? When the volatility crumbling in.
And bro, and that goes back, like you said, running your shit like a business. So understanding that they got shit they gotta hit, and it's a business. So bro, using your stop loss, scaling out your position. So I mean, we don't know, bro. We don't know what the market is gonna do. We might win more than the average nigga, but we don't know what the fucking market is gonna do. That's why we gotta accept our risk, scale that shit in how we supposed to do it, Because when they do that bullshit, like they're gonna do, like you say, it is manipulated, Ziggy. It's accounted for. It's an accounting for a loss. Like in a business, it's accounting for losses.
Absolutely. Absolutely, man. That's a great way to put it, Lamar. Oh yeah, we about to. Okay, the live is officially up.
Here,
motion. Finally.
Yes, Sirski.
Yes,
I'm gonna do. For the best for y'all, back test it. So I'm a bar replay for you guys.
Hey, yeah, that's a great investment.
Oh yeah,
for sure,
bro. I don't play the video game no more, bro. Like this bar replay shit changed my life, bro.
Facts. Hey, because that back testing will definitely just train your eye and just up your confidence. You know what I'm saying?
Bro, confidence is everything. I didn't play the game like that, bro. I literally just be back testing nigga on my phone,
my mama,
my laptop. Yeah. I'm about to share my screen real quick.
What's up?
So Frank, bro. So this segment today, so we giving the viewers, bro. So introduce them to Ziggy because you just went live, bro. So people who tuning in. So Ziggy, introduce yourself, bro. Like let these niggas know.
What's up, you guys? My name is Ziggy, and you can follow me on Instagram, Taz the Trader. And basically, I trade currencies. I trade Bitcoin. I trade gold, and I also trade US30. And I started in Forex from a marketing company, as you all know, is IM. And I mean, obviously, I was looking and I was just seeing that nobody really could help me become a profitable trader. And I wasn't interested in getting into marketing because I'm not really a big person to tell somebody to do something and I'm not even, making the money that that person's wishing to make. So at that point, I realized that it's, called a scam. As we know of. And basically, I, withdraw myself from the company and I just locked in and, I invested some money in myself to, buy the, like I said, I back test, do the bar replay. So I put money into that. I mean, I obviously put my money in my account and just kept practicing. And I lost tons of money, but it was helping me learn because what my problem is, I understood trading. It's just that it's learning curves and there's different. We look at money as we're very attached to money, and we make money. We're emotionally attached. So when we throw it into the market, it becomes just numbers. It becomes a game, and you're playing with it. Like you're playing with your emotions, and whenever you're playing with someone's emotions, it can turn out good or bad. So I realized that I need to cut that off. So just different mindset things, but I mean now, I'm not attached anymore, and things are, turned out better for me.
Absolutely. Ziggy, bro, I got a question for you.
What's up, man?
So you said they play off of emotions. Okay, so me personally, I feel like there are two main emotions played off of in the markets when it comes to, allowing yourself to be manipulated or, how the market likes to manipulate, people because they know they're trading based off a certain emotion. I feel like it's greed and fear, straight up. Nobody likes to lose money and nobody likes to be wrong, right?
And that's true.
It just goes against our natural, our natural instinct. Nobody likes it. You know what I'm saying? So that goes to go back to where you just got to put your ego up and go back to that psychology. Because it truly is just like, the name of the game is really psychology, bro. And, it's chess, not checkers. When you take it in a sense like that, I mean, the psychology just gets you there long term. And it just really sets the foundation. And so I'm glad you mentioned that, emotions. Because emotions is definitely something that run the market. Because if you think about it, we're trading with people, whether it be market makers, the big money, hedge funds, they are all people. And people have emotions and people act based off of certain emotions. If people are greedy, they'll hold a trade too long, you know what I'm saying? And it'll end up coming all the way back to your position. I can vouch for that personally. I done did that a few times in the summer with Dirty 30,
Ooh, that's the worst one to do it.
when you up like a band or two, and it just come all the way back to your entry, and you like, bro, what happened?
And now I'll tell you something about that. So I agree, but I disagree. And like for people that put their stop loss and profit, it all depends on how the market's looking. Like I was in a trade the other day. I still made like I don't know how much I made, probably 600 or something like that. But I still made it, and price actually came back to my entry, and I was down probably like $40, which I mean, I still won the trade. It's just that you have to know what the market's doing. I'll show you the trade I was in. I'll explain it all to you. But I'm about to share my screen now. This host disabled. You gotta disable the. We can't screen share right now. Franklin.
Fam. Frank.
Oh, y'all can't hear me. Okay, there we go.
It says we can't. I can't screen share. You got to disable the private.
Hey, Lamar, go to my live real quick and tell me, bro. Tell me, where is this screen share set? It should be on here. Oh, never mind. I got to do it from my phone. I forgot I was still plugged in. I'll follow y'all. I got y'all. I forgot I was on it on my phone too.
Okay. Hey, bro, but just to tag on what you said earlier about your emotions, and you know what I'm saying, detaching yourself from the money. I think that's a big one as well. Like once you detach your emotions from the money, like take your emotions out of it. And for the people out there who just now getting started, or you know they've been doing this, a good way to do that, bro, is to look at it in more so percentages. So it's easy for them to play off your emotions if you're thinking like, you know, you up $1,000, $2,000, and you fuck around and lose that shit. Rather than thinking you up 1% or 2%, or that's your gains. Just think about it more percentages. It's easier on your mental, on your psychology.
Take it up.
You changed it, Franco?
Yep, you should be able to share your screen now. Okay, Ziggy. Going back to some of the emotions that are played back on in the market. Okay, I said I feel like some of the two main emotions that are played off of is greed and fear. You said you disagree. I want to hear your perspective.
Oh no, I agree with that. I agree.
Oh, okay.
Greed and fear, yeah.
I was about to say, bring me a different perspective. I'm always open to learn something new.
I agree for sure. Mine was fear.
This is Ziggy's screen.
Greed shit.
So, for example, so you see where that wick is? You see where Bitcoin wicked at that top? You know that good wick is we was talking about earlier today.
Yeah.
Okay, bro. Think about it from this standpoint. Bro, the people that were greedy and still trying to buy that, they got hurt. You know what I'm saying? They got hurt. And the people that were fearful to short because it looks so bullish, we don't operate off of FOMO, but they didn't get to capitalize off that head and shoulder. So that's just an example of fear and greed just displaying in the price chart itself right there. Because everything happens based off of, emotion. But I feel like,
Let me all right, so I'm gonna break down. So I'm gonna start off with
send out these links to everybody.
Let's started here. So I started trading here. I started looking at the market here. This was the 8th or the 7th. I'm just looking at it. So So I see price made a higher high here. So how I trade, I look at market structure. So if price makes a higher high, higher low, I look at that. That shows me the direction of the market. I'm just hopping in with the banks. Now, let me show you how. So basically, what I did is looked at another one, and then I pull out my fib. So when I trade, put this a little higher. So when I trade, I use my fib. So I put out my fib here, and I waited for price. So right here, my 0.382 is, or my 0.38 basically is my gold zone, and then this what I call here is my God zone. Anything that hits my God zone, I know it's going to shoot the fuck up.
At 618.
At 618, that bitch is bread and butter every time. But I don't get in just because it hits my levels. I put these levels here, and I'll just do this for you guys.
Gotta line up with something to the left for sure.
Exactly. But not even just that. I have a strategy called the box strategy.
Talk to me.
So now, Lamar, can you see this too?
Yep, your screen is up, dude.
Yeah, I see it, brother.
All right. So now, where's my, oh, it's up here. So I want these up. All right, so I'm looking at these two levels. So for now, I'm looking at these levels to get hit, and typically I would put alerts here. So I don't even look at the charts until my alerts get hit. So I will look at these alerts, and I will basically see if my strategy is going to happen in these levels. If it doesn't, I don't trade it. So I'll let price do what it do. So I've seen price hit here. So I will break it down to here. And basically, I'm an experienced trader, so I see this. But as you know, this is 30-minute candles, right? So 30-minute candles mean that if I go to 15, there will be 2 candles of this. So if I go to 2 candles of this, I basically will rebox this as a new box. And I can see that price broke out of my box, which means it's an uptrend, right? Can you guys see that?
Yeah, I see it, bro.
So I will come back to here. I'll see a nice wick, beautiful, nice wick here. So that signs a rejection. So for me, knowing Bitcoin is the best thing ever to follow market structure. That's why you were saying, Lamar, it's probably the easiest thing right now. It follows market structure like better than any forex pair, better than any currency, better than anything. So I'm looking forward to come back here again. Which I actually got in over here on this candlestick, but obviously so.
Beautiful.
So price came back down, it shot up. I got in here, and I'm gonna just show you frankly how I manage my spread. So I got in on this candlestick here. It was about right here. So what I put is I had a 50 pip stop loss. Right? You're gonna ask, why did you have 50 pip stop loss? Well, just because price wicked here, it could still come to my God zone, My God zone was about, the line was about here. So with me, I got it under here. And I typically do even numbers, so it's easy for me to, calculate how much I'm going to make on a trade or calculate my, up here. So what I do is I always start on how much I'm losing. I never start on how much I want to make first. It's about how much I'm risking. So I'm risking 50 pips. I traded with 2-1. I do 2-1 every single time. 2-1 is the most accurate. Sometimes I do 3-1s. It may be once a week, sometimes 2 a week, but I only trade 3 times a week. And I tend to get you know, my 2-1 every time. So I'll do 100 pips. Actually, I made $1,000 off this trade. Actually, I remember this. So I mean, TP's damn near almost hit, but obviously, you know, it's going to smack the next term. So it smacked. You feel me? And that was a beautiful trade. Like, look how beautiful that was. You know what I mean?
Right. Straight up liquidity, Kenny. You wrote that smart money. That was a straight up liquidity trade.
Smart money, bro. So now I'm like, well, I won the trade. Typically, I will be done for the day. But this led on to the next day. This shit was just moving beautiful with its trend, bro. This was the start of a new trend. As you can see, bro, it's the shoulder, head, shoulder, change of direction. Do you see that?
Yes, sir.
Yes, sir.
So now what we do is we scratch all this shit. All this is gone. We just, you know, fuck the market up with our tools. So now I see the higher high. I know this hit my zone. So I put it here. And I let it do what it has to do. I'm just trading with the banks. So I see it makes higher highs or whatever.
Not to cut you off, Zig. I'm about to exit the Zoom off my phone, and just let me know if y'all can hear me on the laptop.
All right.
All right, good.
All right. So now I'm gonna explain this to you. So you see how I'm gonna explain this. You hear me, Lamar?
Yeah, I hear you, fam.
All right, bro. So I got in this trade. So remember I told you that if it does your strategy on the my strategy on the either these levels. So this was a level here. And then this is my other level here.
So when you boxing these up, you usually only doing this on the 1 hour?
1 hour, bro.
Okay.
1 hour, bro. I look at different time frames just off instinct. But typically the 1 hour shows me my strategy. So with this here, in this level, I seen wicks of a head and a shoulder. If you see wicks and a head and shoulder in this level, that means that there's money getting put in this, and this trend is going up. You know what I mean?
Mm-hmm.
So, and also I'm seeing a change of direction. So I know this trend is going up. So when I see that here, I bought this candlestick here. So I got in here. And my stop loss was under here for 40 pip stop loss. So I had a 40 pip stop loss, and I had an 80 pip win because I do 2-1, right?
Right.
So actually, I did a 50 pip stop loss. I'm gonna show you exactly what I did. So I did a 50 pip. I was on some nut stuff, but I'm gonna show you what happened. So remember how Franklin was like, price could almost hit TP and then come back to your entry.
Right.
And some people are greedy and just don't take profit. Which honestly, I didn't even see price hit like up here in this area right here. I didn't see it, but I seen it on the second lower high, and I was like, damn. But I still trusted my, you know, my analysis. So what happened was, I'll take this off here. I mean, price came up here. I was up like, you know, 700. It came down and it shot up and take profit hit. And I was up at 1,000. I won my trade.
Man.
That's beautiful, Zig. I've been watching this whole time.
Beautiful. So now, Franklin, I'm gonna show you the short that how I seen that short.
Yep.
We're gonna skip all this.
Damn, that bitch got strong.
I caught this buy too. I caught this buy too. I didn't know it was gonna go this high though. This surprised me.
You got to shake it, that
My
motherfucker.
take profit was
Sure.
like my take profit was like right here. That shit, man, took man. So I was killing on Bitcoin.
Bitcoin busting. Hold on.
Bitcoin easy. So Franklin, this is what I seen, bro.
Oh man, she is at 60K. I did not peep that.
Smack 60.
Oh yeah. It's about to make a higher high, bro.
Long hold just busting. I'm already knowing.
Yeah, I didn't hold it though. I don't hold trades like
Ziggy, bro. Not to cut you off, him. I want to go back on something that you said, bro. You was basically talking about your game plan, bro. And I feel like people need to understand what we was talking about before the stream is you got to go in with a game plan. So what Ziggy did, he went in with his game plan. He already knows what his entry signals are. He already knows what he's looking for. You know, he got a guy zone, his goal zone. He gets the smart money concepts. He knows what risk reward he's looking every time. He's looking for a 2-to-1 because he knows based off of the system that he trades, he gets offered, you know, a 2-to-1, you know, maximum 3 times a week. Not maximum, but, you know, maybe minimum, depending on what's going on with the market. If his market's moving pretty good, you know, then he might get that set up like 3 times a week, you know, so he's not being forced to trade, or he's not forcing himself to trade, you know, 5 times, 10 times, which just causes reckless trading. And to me, in my opinion, reckless trading is nothing but just trading without a game plan. So I'm glad you mentioned that, Ziggy, you know, and you also mentioned your risk to reward. That was big.
Definitely huge. I like how you scale out your risk before you even looking for your winners. So you just seeing if it's even fit your criteria.
Exactly.
That's
and
smart.
This right here, this is the one I showed Franklin earlier today. So I seen that price was, and I'm gonna actually go back because I looked at this before that, honestly. Dang, where is this? So typically, do you guys know about the stop point?
Yep.
Shooting star.
Sure.
And whenever you see that, you know to buy, right?
That Morning Star?
Yeah.
Oh yeah, when you see that, you need to buy. But typically, what I seen is I went to the 4-hour. I seen price hit a big wall. This is a strong wall here because tons of people bought here thinking it was going to break and go to 70K, and it plunged. So I know it was a strong wall. So what I did is I looked at it as a good opportunity to, you know, set up, get my setup going, you know. So what I did was I looked at this candlestick. I said, let me wait for another one. So I seen this one. Now I seen that it's also another stop point because it broke, closed, came down. Typically it will shoot back up some more. But what I did is I looked for my level. So I seen in my level, I seen that price was rejecting this area here. So now
Good gems too.
I see you, Jake.
What's going on, Amelia? Make sure we get Ziggy on here.
Yeah, waiting for him. He know to join the same link.
Amelia, did you join from the Telegram?
Might be me.
It's me.
Okay. Lamar. Hey, Lamar, bro. My head was somewhere else.
Bro, me too. I'm like, Amelia?
We ain't gonna talk about that though.
Yeah. Let's get back to business.
Shut up.
Okay. Where was you at though, Ziggy?
Hold on, Zig. I'm about to let you share your screen.
Yeah.
Give me 1 sec.
1 sec.
You should be good. You should be good to go, fam. Get it.
Mm-hmm. All right. You can see, right?
Yes, sir.
Yeah.
Mm-hmm. So I got in.
Beautiful. That pin bar is beautiful.
Man.
Not to mention, bro, it's just that looked like a 50% retracement upon that engulfing. I mean, of that 1 hour candle. I mean, it ain't really engulfing nothing to the left. Well, it might be engulfing some structure to the left, but it ain't necessarily engulfing previous candles. But that bitch it is an engulfing candle for sure. And one thing I notice is engulfing candles usually and typically, if it comes back to retest that a certain area where that engulfing candle popped off, it's going to be like a 50% retracement of that engulfing candle. Just want to throw that out there for you. That was something I just noticed.
So for me, how I looked at this trade is I looked at, boom, it hit my level. It's rejecting. It closed under here in this wick area. So it's a sign of, it's a sign of a downtrend. So I see that. And then I was very confident to hold this trade because it made another lower low. And that's just market structure, honestly. So for me, I told myself if price and how I
actually your equity in your account, how much are you risking per trade?
I'm risking
percentage wise.
I'm risking I look at it in dollars, bro. I'm risking $500, $600 to trade.
Okay, so you do monetary based risk instead of percentage based risk.
Yeah, I don't look at percentages.
Okay. For sure.
Okay. All right, I got you.
Like, you know, there's people investors that say risk only 1%, which I don't look at it like that.
For sure, yeah. No, preferences, everybody different.
10%. They'll say if it's over 10%, get out the trade. I don't look at it like that, bro. I risk right now in the situation, in financial situation I'm risking $500, $600, and I'm making a good steamy from winning. Mm-hmm. But I'm gonna explain to y'all about gold. Gold was a whole nother situation the other day.
We can definitely get into gold, man. We've been taking it all week.
Man, so on this one, you know, I risk 80 to win 160, and I mean, shit. In a matter of the time playing a video game, I should hit. You feel me?
Video pips. I'm digging it.
Yeah, so that was that one. And honestly, I'm gonna show y'all something. I'm experienced, so let me just show y'all this. So I call this the slide, right? This is called the slide. Man. Whenever you see the slide, price hit a wall and it's depressed. It's depressed. But that means price is depressed, but it's going to break eventually. That was just like its retest to come back down. So what I seen here was Price hit. Price hit my level, man.
Bro, Ziggy, for the viewers, bro. So when you using your Fibonacci, where are you going for? Like when you know where to pull it from, like from the bottom where you just went. What points are you going to?
So this point right here, remember how I told y'all if it hits my God zone, it shoots up. That's bread and butter, right?
Yeah.
When I'm saying that's bread and butter, I'm saying you need to go back and put this one line. Oh shit! Somebody's trying to log in my shit. Fuck.
Man, tell him chill out. You get busy right now.
Yeah.
All right. So on this one line right here, this basically put that in that. So remember how I showed you how I got in this trade here, but I got in this trade because it hit my God zone, right?
Right.
So then I know this is a strong bottom. This is a strong, wall right here. I mean, let me just draw this up. Let me just draw this up for y'all, man. Came here, right? Wicked. Shot up. People made money here, man. It tried to break through here. It didn't. It wicked, and then it broke. Made its head and peaked. Then it came back and shot up. So this is a low that I'm looking at. So I draw it from here to just the top here. Easy.
I like that.
The highest of the high.
Yes, sir.
That's why I chose this one right here instead of this one or this one.
Okay, I like that.
So now I see price hits my zone. Yes, it's the line here, but I'm looking for, like you said, I'm looking to the left. I seen the left. This was an area right here to where price came up here, pushed. Price came up here, it pushed, it hit a strong level here and shot up. So I'm looking here. I actually got in this trade, and like I told you guys, I started making beats and recording for my friend. So I was like, let me just get out the trade. But let me just show you how I look at my spreads in this situation. This is how I get freaky. So I seen that this is called the slide, depression slide. So I draw that level. I'm gonna just take this off. It's not confusing anybody. So this is a level here. I look to trade it. I actually just hopped the fuck in when it hit this zone. Hopped the fuck in, and why I hopped in and then look at my strategy in this zone is because I knew it was a depression slide. And when it's a depression slide, price is going to come back to up here every time, every single time. These are candlestick analysis that you got to look at. So now I draw my counter fib, and I'm looking to hit my 50. Looking to hit my 50 for take profit. So this is when I say you can do 3-1s. This is a perfect 3-1 opportunity. So, and the only reason why I got out is because I'm already up. I already doubled my account, like I showed you, Franklin. So like, I'm not finna do no extra goofy shit. I would get freaky if this was my first or second trade of the week. I would have got freaky. I would have held this bitch and got freaky. So
absolutely,
what happened is I got in here. I seen this wick here. I got in about up here. See, those 80, so I'll do 80. And I keep it even. I try to keep it even and simple, man. And honestly, for this here, what I did, actually, that was 70. I'm kidding. So why I did that here is because you see this low here. If price comes to this low here and it breaks here, I lost. That means it's a downtrend and I was wrong. And it's going to keep going down. So for me, I'm looking at to go to 140, right? Y'all see that?
Yes, sir.
Yep.
So I'm looking at that 140, and so that I look at my loss first. So every time I draw my losses first. I don't draw everyone wants to draw their wins first. And draw your loss first because every trade's a risk. You're not guaranteed to make no type of money when you trade, when you put in that, that order. You're not guaranteed. So think about how much you're willing to lose first.
I like that you said that. You got to always be able to accept risk.
Exactly. Accept your losses before your wins. So now, I mean, shit. I was never in drawdown. You
Yeah,
see, like that was beautiful, bro.
cyber gang.
And that's why when I got on here and I started looking at the charts, I'm like, damn, if I held this shit, I'd have been up for fucking bag this week. But I'm not tripping though. It was all good, bro. I already knew what it was gonna do. I'm not tripping at all.
You executed beautifully. Shit, fuck what happened afterwards.
Yeah. So that's what happened, man. I knew that whenever you see depression, look at that depression, it shot up. Boom. Every time. Depression. Boom. Depression. Boom. Like every time. Depression. Boom. Depression. Boom.
Why are you here?
Like it's every time, bro.
I'm just saying.
Just every time. So now I'm gonna get to gold for you guys because gold was the for real money maker, man.
So, question, bro. So for people out there, what
I'm sorry.
sessions do you fuck with? Well, you don't even you trade naked, but what time frame would you say, like time of the day, usually do you take your most gold positions?
So for me, I look at whenever the market gives me the opportunity. So I never look at the times. The only reason why I would look at different sessions, I was never a session person. Only time I look at sessions is if it's London and it's just because it's more volatile. So you have to make longer, bigger stop losses because sometimes the market, I mean, we're trading currencies, guys. So I mean, the market's going to do some crazy shit. You know what I mean?
Right.
It's not like stocks. Stocks follows market structure way better than currencies, but you just got to look at, the different sessions on if it's volatile and if it can be wicks. Like London session, it wicks a lot because it's moving hella fast. You know what I mean? Like, so for this trade idea here, I called this sell. I didn't get in it. I called it, like, for my trade idea. But I mean, shit, Franklin, we already know because we knew it was gonna come down to this moment over here. So I'm gonna show you how I looked at that. So I actually woke up. I seen Franklin's what is it, the virtues thing you put on your snap?
Oh, the 5 virtues.
Yeah. So I seen that and I was like, dang, like
My bad, y'all. I'm back. My
no,
audio had went out again.
but I was like,
But I'm
dang.
listening, Ziggy.
I was like, dang, I see gold tanked. I was like, let me see if it hit my level. I mean, it hit
That's
my level
1730.
right here. So, and I knew it was gonna come down because let me tell you something, guys. I don't know if you guys noticed, and this is why I love gold and US 30. If you really, and this is my thing, bro. I'm a trade freak, bro. I call myself a trade crackhead, bro. I'm addicted to this shit, bro. I'm addicted, bro. And I'm happy to say I'm addicted. I'm not, I'm not.
This is
I'm
your
not
passion.
scattered. Yeah, it's my passion. But this is the thing that I learned. I don't know if you guys noticed this shit, but I'm gonna tell you about gold. I'm gonna start with US 30. So US 30 gaps every Sunday. Did you guys know that?
Yeah, I be peeping her ass.
And if you get in with a little amount, that's like a 0.01, you're gonna make a little bit of money, bro. Withdraw that shit. Put it in your gas tank. Shit like that.
Man.
But let me show you something about you. Let me show you something about gold. Every single Friday, gold hits my level and it fucking shoots up every freaking Friday. Let me show you. Every Friday. That's how I told Franklin on Thursday, bro, it's gonna come down, bro. Because every Friday it does the same shit. Every single Friday. So basically what happened is that as we know, gold, it made a crazy double bottom on the daily. And I can pull that up.
At a very great point of interest as well.
Big wall here. I actually was in this. I was actually in this, and it hit my stop loss right here, which I was so pissed. I just didn't have it low enough. and
It's
that
all
shit
good. It
chopped the
happens.
fuck up. But I'm not tripping, bro.
All right.
But like,
Come with
so
the
I've
game.
seen the double bottom, so I'm knowing price is gonna have a good push for a higher high. So I expect it to go up here, and I'm not tripping. I could have made a hell because that shit went to what, 1759. That's crazy. So basically, I was just like, man, I know it's gonna come down. It's gonna plunge down. It's gonna come down. So now, when I seen it tank after watching his story, it was on this candlestick right here. It never came down here yet. And basically, actually, yes, it did. I'm on the 4 hour. Let me go to 4 hour first. I drawed the 4 hour on here though. I draw the 4 hour on here, and I'm gonna explain why. So remember how I told you how on my one, it's off of a big level. This was a big market level it hit. You want to know why?
Talk to me now.
Look at all this, man. Look to your left, man.
Hella traffic.
Look at all that.
Hella.
Price came here, shot up. That's a big move, man. Came here, shot up. That's a big move. Came here, shot up. I mean, beautiful. So I take this level here. I wouldn't take this one. I would take this one. So I took this level to the top. Price hits my level here.
Hey, fellas, I'm about to send the live to a couple, adults. Hey, Zig, Miss Bingham and Mr. Bingham finna be on here too. So,
For real?
I mean, y'all can still do y'all, do y'all thing and talk y'all lingo and stuff. But as far as the profanity, you know what I'm saying, just while they on here,
Oh yeah,
let's
yeah.
just cut it down just a little bit. But
Understood.
other than that, y'all all good, family.
So this what happened, man. So price came here. I seen this wick, then I seen this big wick. I got in here.
All of my friends were there.
Good.
Dancing.
This is how I made mines. Oh no.
Last year before she died.
And I put my stop loss was 50 pip loss
Yeah.
for 100 pip win.
I didn't break that.
But on Fridays, man, I do big lots, man. I do big lots because why, if something has done something for the last 3 months, why would it do something different?
You must have one.
You know how many Fridays 3 months is, bro? Like, this is the same thing every single Friday.
It's about 12
every
Fridays.
single time.
Shit.
You said what, man?
That's about 12 Fridays.
12 Fridays, bro. Why on the 13th Friday would do something different? And it's setting up perfectly for me.
I like that.
So I bagged. I made 3K off this trade because I did big lots, bro. So, and then I never was in drawdown. As you can see, I got a wick entry. I never was in drawdown.
Mm.
I let it do what it did. When it came up here, I'm like, oh wow. Oh wow. Came up here some more. I even looked at the 30-minute and it did that. I got in here on this and it did that. Beautiful, bro.
Zig, after you should get done sharing your analysis, I'm gonna have Lamar share his screen and give his breakdown a go. Because I know he was in this, or not in it, but he was definitely breaking it down as well. And then I'm gonna share my screen. I'm gonna share perspective as well. So we can all share our perspectives on this go because we all got a ton of sauce to give out.
Oh yeah, for sure. And I got one more thing about gold up here that I looked at. Yeah, I'm done after this. But so yeah, this was my risk. I did 50, to do 2-1. And why I put it down here is because honestly, if you look at the 30-minute, this is a big wick, man. This is a head and shoulder wick. If it passes the head, I'm out. I'm done.
Right.
So Ziggy, I have a question for you.
Good.
Okay. So I see how you like to get down, in the hour and some other complementary time frames. So what are you looking for to get an entry as far as lower time frames, like, you know, maybe the 15, the 30, the 5, the 1, or do you even scale down to those time frames to get those specific entries?
So for gold, I'd go no lower than 30 minutes
Okay.
because people want to get, we don't aspire to get 15 pips. 15 pips doesn't make you a great trader.
Facts.
To make you a great trader is 40 plus, 35, 30 to 40 plus, man.
Actually riding the trend.
If you can get 30 to 40 plus moves consistently, and you're gonna get your losses, but if you're consistent, bro, like you're a good trader, man. You're a good trader.
Hey Ziggy, I agree 100%. But there is one thing I do disagree on. As far as the 1 minute time frame and what it offers. Yeah, some people do go on a 1 minute time frame and they like to scalp those small movements.
They do.
Okay.
I actually know somebody who makes 5K a day who does 1 minute GBP USD.
Man, but I also feel like it offers a ton of more things. It offers you an opportunity to, you was just talking about big lots, right?
Mm-hmm.
So let's say you scale down to the 1 minute, and the 1 minute usually will offer you a tighter stop loss than the 3 minute. The 3 minute will usually offer you a tighter stop loss than the 5. The 5, then the 15, the 15, then the 30, 30, then the hour. You know, just because all those, you know, that hour candle is broken up into 4 15-minute candlesticks. Those 15-minute candlesticks are broken up into 5 3-minute candlesticks, and then so on and so forth. So you really dissecting that candle. So as far as risk, but not reward. Reward, I like to scale out on a higher time frame. But as far as my risk, I like to scale that in on like a lower time frame because it gives, and I'm gonna tell you why.
Yeah.
Okay, so if I'm scaling in on a lower time frame, and you know I'm trading my profitable system, and you know my game plan, right?
Yeah.
This allows you to just maximize your reward by minimizing your risk. You can minimize your risk by going to that lower time frame and saying, let's dissect this up. Let's dissect this part of market structure where there was a shift in momentum or where there was just crazy traffic and liquidity candles, stop hunts, you know, whoop-de-whoop, etc. If you can dissect that and you can minimize your risk through your creative efforts, I feel like that automatically opens you up to a bigger reward just based off of your creative efforts.
Yeah, that's true.
So that's another way of looking at it. As far as going to the lower time frames, that's what I just wanted to offer to y'all.
You trade on lower time frames?
All time frames, monthly to the 1.
1 minute?
Yep, I love them all.
Okay. You say you don't discriminate.
Oh God.
All right, so this is my last setup, and then I'm gonna let you get to it. But so with this setup here, I seen that goal, went high, made a higher high or whatever. But me, like I'm saying, experience. This is, a Thursday. I know Friday, the level's coming. It's gonna hit one of my levels. So I know the short is coming. I'm just looking for it. And for guys that, if I'm saying that, that doesn't mean I'm about to just get in now. It has to go with, my plan, my strategy. So this is exactly what I did. I boxed it up and I waited, man. Now I've seen Price pull this off. So I'm like, it made a lower high. This is market structure. Like I said, I'll trade off market structure. So made a lower high. So I just pull out the fib and I pull out the counter fib, I take this high. So this is the highest of the high to the low of the low. Look at that, man. You see that level get hit right there?
Mm-hmm.
Level got hit, man. So for me, I'm looking forward to come to hit my God zone, my gold zone. So with my God zone, that means it's power coming. It's power coming. So I wanted to get to my gold zone for my inner. So it hit it right here. See that? So now I'm in. I got in this trade. Well, I didn't get in, but it was an idea that I put out. Now what I did was a 40 pip stop loss. 40 pip stop loss. And as you know, 2-1, we're going 80 pips, man.
I'm loving it, too.
Hey, bro, that your goal zone and guy zone with your fib, bro, that shit, excuse my language, that is really powerful stuff. I love you using it. I like how you breaking it down.
Let me just show you, TP smack. But yeah, it is really powerful. But I will say it takes practice on knowing where to put it.
Beautiful.
It definitely takes practice, and it takes failure, bro. Like
definitely. I'm glad you said that.
Talk to him, Zig.
I looked at, bro, I promise you, bro, I can tell somebody right now, use the fib and you're going to make money. And they're going to use it in wrong ways because you can put it in different places and manipulate yourself to thinking you're about to really bag on a trade and it just goes the wrong way. Like realistically, let me show you something, man. Let me show you what some people did because I already know because this is something I would do. And I just know. I would have pulled this low here like a goofy, and I would have went here.
Real?
I'm gonna think that this is finna buy from this level here, right?
Yeah.
But I'm being experienced. I know that on Thursdays, my level's gonna get hit in this area.
Okay, nothing against IML, but is that what they taught? Is that how they taught y'all how to use a fib in IML?
I learned the fib from IML, but it was one of my buddies, he paid to get what is the word, man? He paid for someone's course through IML. And they basically was explaining the fib. But like I said, they can show you the fib and they can break it down and show you, but it takes practice and it takes failure, man. Like, I don't care what nobody say, man. You have to be the best learner ever. And like, this has to be really naturally born for you, and which is dang near impossible. But honestly, I feel like in trading, man, you have to lose first, man.
Facts.
Like you have to lose first. It's like we tend to do things and like people want to make money instantly. And it's like, bro, trading isn't designed like that. So if you're not able to lose money first before you start to make money with financial freedom, then it's not made for you.
Absolutely.
Facts, Ziggy.
So this is what I would have looked at, man. I would have looked at it wicked here, and I'm trying to buy, which obviously, I can get a nice buy here, but I'm not looking for, this little move, man. I'm looking for this move here. And I mean, I would have held it, woke up or something, and I would have been down money. I would have lost. It would have hit my stop loss. I would have lost. And I would have been hurt.
We actually had somebody from the inner circle who took that trade.
He took the sell. Yeah, I mean, it was a nice sell, man. It did what it had to do, and it came up. It never hit my stop loss, so I wasn't worried. It hit my take profit, and I didn't take it. I didn't make no money off of it, but it still was, an idea. I just was looking at, this nice buy here, and I knew it was going to happen, and I mean, it did. Yeah, man, I'm off for my stuff.
Ziggy, right on, family. You gave great gems. Great gems, bro. You hit on a lot of good points. As far as psychology, just accepting your risk and just accepting that losses is a part of the game because losses is what get you to that next level. Excuse me, that next level. You know what I'm saying?
Jiggy.
Yo.
So for the people out there who just now getting started with this Forex stuff, bro, like what tips would you have for that beginning trader? Like what would you say to him to get him on his path to being a successful, profitable trader?
I say, so when it comes to trading, man, you have to realize 90% of traders every single day in the 6 trillion market lose, right? They lose. So you have to be that 10%. And they're saying it's cutting down to 9 because there's so many people introduced to trading and they're coming in from these marketing companies, which if you're, watching this right now, most likely you probably, seen Forex from a marketing company. Like that's just reality of today's life.
Man.
So you have to realize that this is not a get rich quick scheme. This is not something that can happen overnight, and it's nothing that can happen in weeks and even months. But you got to be aware of that. So when you're aware of that, that gives you a bonus because that gives you the knowledge to, okay, I need to open up a demo first because a lot of people don't want to do that. And so that's one. Now, 2, to be a profitable trader, man, you have to understand that you're not going to win every trade. So how I just broke down and showed you that I do a 2-1 every single time, do it every single time. If you're 60%, which is still good, it's not the best, but it's 6% is good. If you're 60%, you got to understand that if you take 3 trades, it takes discipline. If it takes 3 to 4 trades a week, you only need to win 2 and you're profitable. 2 trades a week and you're profitable. But there's people, so many caught up. Oh, I just won this money. Oh, I'm about to get in again. Oh, I'm going to get. You're over trading, and then that's going to set you back for higher risk. The more trades you take, the higher you risk your account.
Bro, good point, bro. The more trades you take, the more odds that you lead into the broker's favor. Not
exactly.
Facts, Lamar. I like that. That's a gem.
I need to write that
gems,
down.
man. That's gems.
Need to be quoted.
That's gems. Like I say, trade like a robot, man. You think these robots get in every day? No. These banks trade like how I'm trading. They trade at those levels.
Bro, take a systematic approach, bro. And how you said, bro, when you see your shit, excuse my language. When you see your setup coming, if you trade like a robot, systematically take it because you putting the odds in your favor.
Absolutely.
And if you, bro, and when you stop taking them, bro, you're not putting the odds in your favor, bro.
Right.
Ziggy, bro, you grade some great gems, bro. Great gems.
Facts, Ziggy. You definitely got to get on here a little bit more.
Yeah,
because I know you be up. So you got my number. Every time you want to get on, just hit me, bro. Check this out, y'all.
I'll be on the charts, man.
Facts.
Love the charts, but let me see what you guys were looking at, man. I want to see.
Okay, yeah, for sure. Give me one second. I'm about to throw something away.
Yeah, Lamar, how long you been trading, man?
Bro, I've been doing this for 2 years now, bro.
All right.
2 years.
Okay.
2 years.
So let's get it.
That's a good time.
Yeah,
I haven't reached the full year yet. This is crazy.
Bro, it's quite a marathon, bro. Keep running it.
Marathon.
Early in, you doing your thing, bro. Bro, and all I can say to you is, bro, continue running at your pace.
Facts.
Stay level-headed. You know what I'm saying? Definitely.
I've been trading since March, Jay.
March last year. Yeah, you started before me.
I think I started, right before you.
Because you and Alan started at the same time, right?
Nah. I think Alan had actually hit me up. He was like, bro, I need to get put on this, bro. He was like, this is for me. I want to know everything about it. So, you know, me being the person I am, I love putting people on game. You know, if you want to better yourself, I'm here for it. So, you know, I invited Allo to the inner circle just because I'm close with Allo as well. And, you know, Lamar know, Trey know, the rest of the guys know. And he got started along with us probably in, I would say, maybe 2 months after I started trading live. Because I first found Forex through an affirmation channel. I didn't find it through IML. So IML was actually new to me. I never heard of IML. I never knew what it was. I was already doing, you know, studying and going crazy before I even knew what IML was. I was already writing all the candlestick patterns down, memorizing, going over market structure, you know, the basic fundamentals, you know, before you really start, you know, getting into your system and
one
stuff.
More thing,
you know,
I hate to cut you off, but another thing about being profitable, you gotta have a notebook, man. You gotta have a notebook, man. It's gonna change your life and it's gonna save your life.
Facts.
You gotta have a
100%. You gotta have a trading journal.
You need one.
Track your
it's a
trades.
Must.
Track your trades.
Hey y'all, before we dive deep again, I'm about to end this Zoom so we can have a fresh new Zoom call and we can get right back to it.
Bet.
All right, got that. All righty. Let's get into it.
Yes, Sirski. Franco, who else joining the Zoom?
Oh, that's my laptop.
Who else you say joining the Zoom?
Zig. It's just me, you, and Zig right now. Johnny was here.
I thought you said earlier somebody was about to hop on, so watch your mouth. Or you talking about just for streaming?
Oh no, the live.
Got you.
Live. Yep.
Got you.
Think of God. He has the courts in his body. Billions of dollars.
Man, Lamar about to text your phone real quick. Hold on.
Sirski.
Think of God. Nothing wrong with it. But think fast. The category of countryside.
I told him so too. I'll bring that. Thanks for working.
Let's get activated. Yes, sir. You know what I mean?
I need to re-up.
Yeah.
That would be nice.
We're finna get into it. Let's dive deep.
I mean, Chuck, where do you get these from? Where do you get these from?
Trey need to hop on the call too.
Bro, he needs to. He needs to.
I'm just tired of like the same old. Like I'm just ready to execute, bro. You said who needs to hop on the call? I
I think you give me some.
My boy Trey. He from the Fort.
Trey who?
Trey Underwood.
Who's Underwood?
Trey Underwood. That's one of my bros.
Oh, okay.
He one of the first people I met that was into this FX stuff.
Okay.
Yeah, he been road dog for real. But man, getting back into this chart, man.
Yeah, you said Miss Bingham and
Ziggy, I want to.
Bingham in here.
Yeah, I sent them the link. That was like, whenever you go live, send me the link because they trying to dive deep into this stuff too. You know.
For real?
Yep, it's beautiful.
That's good, man. That's good.
Man, for real. So, Ziggy, I'm going to offer you this new perspective on going to the lower time frames. And I know you got your system. You know what I'm saying? And you find it to be consistent and profitable. That's your bread and butter. But I just want to offer you this perspective on minimizing your risk.
So, hold on. So, I want to just ask this real quick. So, you do 3-1, right? I think I thought I asked you this. Did you say 3-1 or 4-1?
Okay, so typically the trades that I'm taking are trades like this, where I'm holding my trades from maybe 3 to 9 sessions, and that will correlate to 2 to 3 days. Those are the type of trades I'm trying to take based off of market conditions. Now, if it's a counter trend trade, that's a different story. You know, in a counter trend trade, I'm more likely to get 1 to 3s and 1 to 2s. But when I'm trading with trend, you know, for example, for positions like these, mind you, this is an Asian high right here. So, and this is the last hill of demand during New York. And just knowing gold tendencies, it loves to make that last retracement around 8:45 a.m. I don't like to say always, because in my personal opinion, there is never a always or a never in the market. You should always be able to be fluid and adaptable. And I feel like with the perspective of there's a always or there's a never, those two words in the market do not allow you to be fluid and adaptable. So coming back here, this was a trade that I had planned out. I believe I had like a $3 stop loss, and targets is just up here. And when you see these trend lines, well, they're trend lines, but they're horizontal line. Where you see these annotations out on my chart, they're just liquidation zones for smart money to come purge. Okay. So, you know, that goes back to what you were saying, riding the momentum of the banks, you know, being on the right side. So check this out. Usually the trades I take can get up to this type of risk to reward, a 1 to 23, or a 1 to 15, or a 1 to 13, or a 1 to 9, you know, based off of certain market structure. And I love the way you look at market structures, Zig, because it's similar to the way I look at market structure. I just use different terminology. That's all. Yeah. The terminology I use, going back to it again, is liquidity pools. These, where I see market doing things like this, accumulating. That's just money being put into the market, like you said, which is liquidation zone for the smart money. And what I mean by liquidation zones, for anybody that is watching, liquidation zones is just, okay. So let me put it like this. Okay. Let's say you got market makers all in this area and they want to buy it up. You know what I'm saying? Just to exchange the dollar for a nice value of gold, because that's what we are pairing right here. XAU versus the dollar. So that is an exchange. So looking at this on a macro level and a business level and an economic level, they need, it's a net zero game. It's a zero-sum game where somebody is losing money, somebody is making money. They need to clear a way for them to make money, for them to recycle money, and for bonuses, quotas, et cetera, et cetera. And that goes back to what you were saying earlier, Zig, manipulation. So I feel like the market consists of 3 phases: accumulation, manipulation, manipulation, and distribution of price, which will be riding the volume of the smart money or the volatility of the bank. In other words, so let's say everybody's selling here, but meanwhile everybody is selling all up in here, banks is buying, which causes an accumulation. Buyers and sellers are getting accumulated. Now longs were accumulated in this area, then manipulated, then distributed. So that's what I mean by the 3 phases in the. Hold on. Can y'all still hear me?
Yeah, you were breaking up.
Okay. That's what I mean by the 3 phases of the market. So me having that in the back of my head, this is why I get offered the risk to rewards that I do, you know, when you like in trend, you know. First of all, I come to a lower time frame, you know, such as the 15, the 5, the 1. I use those specifically for entries and risk. Higher time frames, hour and above, I use those for reward because they allow me to just gain clarity of targets for smart money. So for example, the bank that was buying after these loans got manipulated and price was distributed because they had enough gas to go up now, they accumulated everybody's stops right here. Everybody, or not accumulated, excuse me, purged. They purged everybody sell stops right here. And when I say sell stops, I don't mean the limit orders. I mean the stop losses that were taken upon after taking a sell. Mm-hmm. So, you know, people that sold over here, it's a ton of money right here. Just by seeing this, this resistance, you know what I'm saying? This resistance right here, you know, people sold right here. And if you're a buyer in gold, this is something great to see because this offers you so many targets. So if you find a setup such as this that offers you risk to rewards to get in with trend, because we're training with trend. Remember when I said when I trade with the trend, typically, when I trade with the trend, typically it offers me pretty much above a 1 to 5 and above, based off of how I'm trading and where I'm trading. Sometimes 1 to 3, 1 to 4, but typically it's gonna be 1 to 5 and above. Because personally, the way I trade, I like to hold trade like 2 to 3 days, based off of some volatility. Now, mind you, sometimes it don't have to be 2 to 3 days. You know, sometimes it might just shoot straight up. And sometimes it might take a little bit longer. You know, that comes with being disciplined and fluid with the market. Because the market is forever fluid and changing. So you have to do the same. You have to mirror it. So coming back to the risk to reward, when you do something like this, you're looking at, well, coming from my perspective, I'm looking at liquidity zones for targets. I'm looking at liquidity zones to purge. I know there's people who got stop losses that sold it right here. I know there's people who have stop losses that sold it right here. And that goes back to what we were talking about earlier about some of the emotions that drive the market, which is fear and greed. People who sold right here, imagine this came all the way back to their spot. You know, the undisciplined, the dumb money. And for y'all that are watching, not based off of anybody's intellect, but immature money. People who are trading with their ego instead of a systematic approach, which is the 90%, obviously. Otherwise, this wouldn't be a 90-10 or 91-9 type of industry based off of percentages of P&Ls, profit and loss. Mm-hmm. So coming back to this, that's kind of the concepts that I'm coming in with. So you might get a risk to reward. Let's say you target this liquidity zone, and this is your first TP for about $30, a $30 gold movement, which y'all who are watching, a $30 gold movement will just result in about 300 pips for those who are watching. So when I say dollars, it doesn't amount to the 10 profit or loss. What's up, Zig?
10 pip per dollar.
Right, exactly. It's 10 pip per dollar. Gold is different than the rest of the FX pair. Just, you know, because it's
more volatile.
Right. You know, we gonna need more dollar to get that gold, you know, versus needing a certain amount of dollar versus the pound. You know, gold is just, it's just held at a different rate. So anyways, going back to this concept, liquidity zones for being target. And I usually map out my liquidity zones on the 30-minute. So let's say this is the long I was looking to take. And the stop, I think the stop I had set, it literally was only a 60-cent drawdown. And when I say 60 cent, once again, that's just 60 pips for the gold market. So literally didn't see much drawdown. There was really no noise in this trade, no nothing. So you really wouldn't have too much reason to get out. Now going back to targets, this liquidity zone right here would have definitely been a target. This would have been my first target. This would have been my checkpoint to let me know we in the game. And then, as you know, seeing that the momentum has not stopped here, you know, because, you know, you want to base it off of probabilities. Like I said, you don't want to go into it off always or never, you know, type of mentality, because that just closes different perceptions that the market could be offering you. You want to be open to all perceptions. You want to be open to all possibilities. Just so, because in that way, you just accept. It brings acceptance. So, yeah, going back into here, you would have had no reason to close the trade. Now look at your risk to reward. It's a 1 to 20. So let's say that's like risking $1 to make 20, risking 2 to make 40. So, you know, it just doubles up. And mind you, for the people that are watching, it allows you to leverage based off of your brokerage that you're using. So if you come in here and you like, I think I want to risk about $250 to find out if I'm going to make around $2,100 based off of a profitable system I know to be consistent. And that just holds me down. you want to look at it, a business approach. You want to realize that your losses are just expenses to your business, but they can also be assets, because your losses just sharpen your skills. It shapes your craft. Every loss you take, that's something new to be learned, you know? So that comes a part of being just forever being a student in the game. So, you know, and then Zig, this is what I wanted to offer you. About the lower time frames. If I scale my risk out on the lower time frames, because I like to get specific entries based off of my system. It allows me to get real specific with the market. This, and I believe I had like a $4 stop. Let's see, 8:30. It would have been about 8:45 a.m. So I'm just gonna put it at the 8:30 candle. Hopefully it'll let me. Okay, I guess it don't want to, but it's all good. But yeah, I think I had like a $4 stop, which for y'all who are watching, that is right here. So yeah, so scaling my risk on the 1 minute or the 5 minute allows me to get this risk to reward. Not only does it allow me to get this risk to, not only does it allow me to get this risk to reward, but it allows me to leverage a lot more, because the way I trade, based off of what my stop loss is, you know, to me, you can have a 10 pip stop loss, or you can have 100 pip stop loss, whatever. For me, in my perspective, as long as allocated to how much you want to risk, it does not matter as far as the monetary value, because it will automatically be allocated if that amount of pips allows you to allocate it. And what I mean by allocating, I mean just another word for adjusting your lot size based off of how many pips you're risking. So that way, you know, you're not risking 20% of your account or 30% of your account.
Hey, show them the calculator.
Oh yeah, most definitely. So
what do you mean about if you got like if you had like a $10,000 account and you want to risk 2%, but you feel like you need to have a lengthier stop loss, instead of just guessing, you could just come to the calculator and allocate your risk like a business.
Right.
Or vice versa.
So let's say, facts, Lamar. So let's say you got a 10K portfolio and you're building this portfolio. And let's say this trader goes off a risk percentage or even monetary. Because if you go off a monetary based risk, it's just going to come down to a percentage anyways, you know? Like, let's say, you know, you had a $10,000 account and every time you trade gold, you want to risk $500. Well, I mean, that's just going to come down to 5%. So it's going to be risk-based percentage either way. You know what I'm saying?
Going back to that. You know what you want to risk. You know how you want to get in. Boom. You come here. Now it's time to allocate.
Mute your phone or mute one of those, bro.
Oh, is it going off?
Going off?
Okay. Most definitely. Okay, my mic working now. Good. Can y'all hear me? How I'm sounding, y'all?
You straight, bro.
I'm straight. Perfect. All right, so look. So let's say you come here and you like, man, I'm seeing a wonderful gold trade. I only like to risk 2%, or if you go by monetary value, I only like to risk $200 on gold. And let's say you got I'm not gonna put 50 pips because we're not. Say gold. Say USD. It's gonna be a little different for gold for those that are watching your pips. Because it's 10
Yeah,
or
for
yep.
sure.
So let's say you was risking 48 pips. We're just gonna use the numbers based off of this setup right here that I got on the screen. Let's say 48 pips was your stop loss. Check this out, Zay. That's what I wanted to offer you. That allows you to use a 4 lot on gold based off of how you minimize your risk. Now, let's say instead of using this, this 48 pip dollar stop loss, let's say you use just, and it's okay because everybody is different. It's all about what works for you. It's no right or wrong. It's all about what works most optimally for you. So let's say um on this we was like, for me, I would never use a $20 stop loss on gold. Me max is $10. Um, but
For real?
let's just say, yeah, for me it's max $10 just based off the way I trade. Um,
Damn.
yeah, I really like to get sniper Zig. I be scaling down to that 1 minute. And I recently just started scaling down to the 1 minute, but I used to, get my entries and stuff off the 15. And even when I was on the 15, I never found a reason to have more than a $10 stop loss based off of how I trade my system. Um, but yeah, going back to this, let's say instead of that $4 stop loss, you wanted a $10 stop loss. Let's see, okay, which is 100 pips. Let's see how your lot size would change. So Zig, remember what I was saying? Based off of your creative efforts to minimize your risk, you can maximize your rewards more optimally. You can optimize the profits that you could possibly gain in this trade. So now let's go do the numbers and let's go check it out. So you were using a 4 lot. What was that? What was it again? It was a 4.1 lot, almost a 4.2. Okay. And this one's 100 pips. This is 100 pips. Let's see how the lot size will change. Now you only using a 2 lot. So this is what I mean about maximizing your rewards. In
Mm.
this, you would in a 4 lot or with a $10 stop loss, and let's say whoop de whoop, you want to come in and you know what you wanted to risk. You only want to risk a certain amount of dollars or a certain percentage, and this is what it offered you. You know, but then based off your creative efforts, like we were saying, that 48 pips, and really it was 40. It was a 40. It was a $40 stop loss, or not $40 stop. Yeah, 40 pip stop loss. You could really get like a 5 lot, based off of your creative efforts. Now I wonder if it'll let me drag it from the 1 minute. I really need to upgrade my trading view. I definitely need to make that investment because, man,
Man,
you know what I mean?
I gotta get
It's
that
wonderful.
rewind like you got.
Facts. I need to
Right.
I need to renew my subscription. Okay, it will. Okay, bet. Perfect. Then perfect, perfect, perfect. If it lets me come back here, perfect. Okay, does it stop right here? We'll let her load. Okay. Okay.
Wait, you got it? You got in there something like this?
What'd you say, Zig?
Oh, so you got into something like this? So how long do you hold your trades for?
Typically it depends. So,
You say on average. On average, I know
on
it
average,
saying like on average. Yeah.
okay, on average, let's say market is trending and we just got great volatility and we in movement. I like to hold my trades from 2 to 3 days.
3 days. Okay, that's cool. That's fair.
Because that's just like 2 to 3 days typically. When it's moving, you know, you get a certain amount of pushes in 2 to 3 days based off of liquidation zones in the market, market structure and market conditions. Now, counter trend, I really don't like to hold my trade more than I used to. Now, I used to be a goat, and excuse my, I used to be a god at these counter trend trades. Like, I mean, man, I used to hold these counter trends for like 2 to 3 days. I used to do that all the time in the summer as well. But recently, what I found to be most optimal for my portfolio I don't like holding those counter trend trades for more than really, like, I would say 2 days, to be honest, because I like to go off of probability. So the probabilities are just less in my favor because it's the counter trend. So, it can always come out and do some type of freaky manipulations type stuff, you know, just because, like, within those retracements, we know that, it's market makers in the market. They're going to do a lot of manipulation within those retracements and, based off of certain positions, you know. So yeah, that's just how I get down. And on average, if the market is trending, wonderfully, and 2 to 3 days. If it's a counter trend, 1 to 2. 2 being max, and I mean 2 is pushing it. Really, I like to, really, if my counter trend don't hit that session, then I'm a patient trader. I always accept my risk, so I allow price to come hit my stop loss if it wants to come hit my stop loss. They BSing me right here. But anyways, I allow price to come hit my stop loss if it want to come hit my stop loss. But mind you, on some, you know, and it comes with experience. Like you were saying earlier, all this comes with experience. With experience comes wisdom, and when you apply wisdoms, that's just a different story. But going back to what I said, sometimes you don't have to let it come all the way to your stop loss to know that it's going to be a losing trade based off of your experience. So I just want to throw that out there as well. And this look like it's just not gonna let me go all the way back. So I'm gonna give y'all a different example. I'm gonna give y'all a different example of gold. Or I might just give y'all a different example of some pound yen trades that I took. So really, yeah, that's Zig, and that's just what I wanted to offer you about how lower time frames can help you maximize your reward and minimize your risk. Going to the lower time frames for me isn't much so of scalping. That's not really my thing. It's much more for portfolio management, and really really being sharp, really being sharp with your entries. Like Q Banks, I know he does the same thing. Q Banks, he loves to come to the 5 minute to to get his entries to display the risk to himself. And I understand why he does that completely, because when you do that, it just really maximizes your risk to reward. And if you think about it from a business standpoint, would you rather put more money on the line for a 1-to-1 than a 1-to-20? You know what I mean? So it's like just come, you know what I mean? So it's just coming from a business standpoint and just from a more mature. When I say mature, I mean like the money. Me and the fellas, we always love to say this. Now the money more mature, some nip stuff. The money more mature. That's a mindset. So now your mindset about money is more mature. You're looking at it from a business standpoint, and from a systematic approach as well. But a systematic approach that allows you to optimize what you got going on. So and I do like to, trade sessions. I do love to look at sessions because I know certain sessions, set a certain demand for the week or a certain demand for the trend. Like for example, I'll go to pound yen. I know that pound yen, London loves to. Hold on, let me get them back on this call. Can y'all still hear me?
Yeah, you good, brother.
Okay, bet for sure. Okay, so yeah, for pound yen, for example, and I put it in my trading plan as well. I'm gonna let y'all dive into some of the sauce real quick. Let me load this up. So
my man Franklin be on it.
it gotta be. So let me come in here. Here go them three phases we was talking about. Okay. So here's some annotations I have made for pound yen in my plan, because I know all y'all know, but for the ones that are watching, it is really good to start off just trading 1 to 3 pairs. I didn't start off like that. I started off trading like 20 pairs. I'm not gonna lie, and I was successful. You know what I'm saying? Until I wasn't with that, and I really brought it down to like 1 to 3, 1 to 5. Now it's it's pound yen, pound dollar. US 30 and gold. You know, those are my babies right there. But, you know, going back to the point, you know, trading like 1 to 3 pairs really allows you to see the tendencies that that market provides for you, and seeing just the specific thing that that market does. Because you know, the gold market stop hunts differently from the pound market. The pound market stops hunting differently from the euro market. You know, they there's different variations. There's different ways and different fashions that they go about, you know, doing certain stuff like, you know, expansion phases, stop hunt phases, and all that. So I feel like focusing on a certain pair is like, you know, let's say, let me put it like this. Let me put it like this. Let's say you got, you know, let's say you want to be a pet owner and off rip, you know, you purchase 3 dogs. To me, I would rather purchase 1 dog first, because then I can really get to know that dog. I can know when that dog wants to go take a, you feel me, wants to go out, wants to go use the bathroom. I know when how that dog gets triggered, you know, do its personalities, you know, just getting to know it first. You know what I'm saying? Versus having all 3 dogs and then trying to treat them all the same when they're not all the same. You know what I mean? So that goes back to just forex. You know, let's say you're trading like 20 pairs and you're trying to treat them all the same. It's not gonna bring you success at all. Um, it's not gonna bring you success if you're trying to treat them such as like, you know, boom, they got the same tendencies. You know, I feel like, you know, and I'm not talking as far as like your system and how you like to come approach the market. I'm talking as in literally that market's tendencies and what it does, you know, based off of like back testing and stuff like that. So coming back to here, I like to back test a lot, just as you zig. I love back testing and, you know, just, you know, gathering information and data about how, you know, certain pairs like to do things. So one of the things I found, you know, here's some gems right here for anybody that's watching. The pound, New York loves to bring in demand, and Asian and London loves to, you know, loves to bring in the supply. Okay, now let's think about that. Okay, let's say pound dollar. Okay, pound dollar. In pound dollar, the dollar is what there's a demand for to exchange for a supply of yen. Now, if we know that the USD is the demand, why would the dollar not set the demand? So let me go find an example, you know, while we trending, of how many times New York's like to set the demand. Boom, right here. Boom, right here. Boom, right here, you know? And sometimes, you know, it get tricky. This is a little retracement phase, you know, where New York didn't set the demand. You know, it was just, you know, New York post London set the supply, you know, so it get different, you know. But here, right here, New York has set the demand. And I'm really just, you know, going back and just looking at times where pound dollar was just, you know, moving in the direction of the trend. Let me see what time this was. 7:30 a.m. That's during New York session. That's a demand zone. You know, that last seal of demand. So coming back here, you know, that's just one of the tendencies that I noticed about the pound pairs. Another tendency is that, hold on, let's see what we want to get into. Okay, so I mean, yeah, these are a lot of tendencies. I don't want to get too much deep into them because I know some of the people that's watching, like, y'all know, y'all just trying to get the lingo, the terminology, and you know, if some of this does not look, if it don't resonate, you know, then don't worry about it. You know, it doesn't have to resonate. This is the way I approach the market. Um, but yeah, these are, I just always like to, you know, just I love to just map out just tendencies, bruh. Tendency, and of course you got your psychology rules and stuff like that. Um, but yeah, I mean, this is just the whole game plan. Liquidity pools, that goes back to what we were saying. It's a part of the game plan. It's just not based off of a random thing that, you know, I'm just saying. It's literally in the game plan. Um, Trade management, portfolio management, your objectives. 1 to 5 trades per week, 5 being max. literally 5 being max. And to be honest, the way I trade now, the way I've been trading since the new year has started, 2021, Ziggy, I'm right along that 3 trades a week. Right along with you, bro. I really only find myself maximum taking 3 trades a week. Just because I like to get those certain setups, that offer me risk to rewards. Risk to rewards, like the one that we just had up, something like this. And if I'm getting offered risk to rewards like this, it's just easy money at this point. How Forex is supposed to be simple, just easy and simple. You know, so if I'm getting setups like this, I don't need to take 5 million trades a week. I can take one good setup and be straight and it can have me straight for the whole week. I can eat for the whole week and just have that floating in equity. And mind you, you can add positions. You scale in. I love to scale in at certain liquidity zones. So like,
Double up.
Yeah, double up, triple up. Let's say, boom, hit the checkpoint right here, and I'm like, dang, this trade is really moving in my favor.
To my stack injuries.
So
yeah, if you go to the 4 hour on that first little dip, it did a stop, point, shoot, star.
Let's move. Right, exactly. So, let's say you already floating in so much equity right here. You got enough equity to cover any drawdown that you take on your stack position or the position that you scaling in. So, this is what I like, which is also in the plan as well. This is why y'all that are watching, I really encourage you, if you get into Forex trading, you need to create a game plan. Create a game plan. Create a game plan. Don't go into it reckless, because it's like going into it blind, So you want to know what you're looking for, because that just puts all the odds in your favor. It's good 11-11 action, but we got about 1 minute, so I'm a end this real quick, and we gonna run one more zoom up, and then we're gonna wrap it up for tonight.
But
give me 1 second, y'all. We finna get it started again. 2, 4, 5, 1, 3, 4, 7. 7, 2, 4, 1. Excuse me. I don't mean to be all on the mic like that. All right, fellas, let's get it. Okay. 5, 7, 2, 4, 5, 1. All right. Okay. Perfect. Let me allow myself to share my screen. And Lamar, I'm about to give you the screen in a second too, if you want to go over anything and break down.
Yeah, I'm just gonna break down pound yen real quick. Just I really broke down gold down there to the bone.
To the T.
You know what I'm saying? So just gonna throw my little 2 cents on her.
Most definitely need it.
Oh yeah. I want to see that Friday buy.
Oh, are you talking about Kylan? I caught a GU buy.
GU buy.
It ended up hitting my stop loss.
I want to see. So, what did you guys see in gold on Friday?
Okay, so I'll tell you what I was looking for on gold Friday. Let's get into it. Okay.
Yeah, I want to see.
So Ziggy, I mean,
hold on.
You already know.
I meant to ask.
What's up?
Earlier. What indicator? Like, what are these numbers, bro?
Are you talking about right here?
Yeah, this shit give me anxiety, bro.
Okay, so look, these numbers right here. To be honest, I don't look at these numbers. I just know this means this is a New York session. This is an Asian session.
Uh,
Whoopty whoopty whoop.
bro,
I
you
think these
really be
numbers
on
just
that session stuff.
yeah. I love to map out my sessions because
Okay. And I remember a while back, Alan actually he told me about the sessions. He was like, Asian session is consolidation session.
right.
So, looking at this now, I actually can see in these, liquidity zones,
Yeah.
it's consolidating. Price hasn't really made its decision yet.
Mm-hmm.
And it's in the Asian sessions when it's doing that. So that's
Right.
crazy.
And then just knowing your market, I mean, me knowing gold, I know gold loves to carry out an expansion phase, aka the smart money volatility on the trend side. It likes to carry that out during New York session. And then, if it's going to carry out the next day, the Asian session will carry it out. The Asian session may make a small retracement, but then the London session and the New York session will carry out that expansion and so on and so forth, maybe for about 2-3 days before it wants to, retrace back and purge some of that liquidity from the breakout traders, which it loves to do. They love to purge liquidity from breakout traders. That's one thing I've been noting lately. But coming back Friday, Ziggy, we was talking about it all week, fam. Lamar, you as well. In the inner circle, we was all talking about this all week. 1730. So I love to give gold intervals. I don't really give it a specific price point. I love to give it intervals.
So I'm gonna ask this question for you.
It's
So
good.
first, I want to know, what is that dotted orange line?
Okay, I'm glad you said that. Okay, so
Is that you put that there, or is that an indicator?
that's my system. That's my system's indicator right there. So this is the previous week high. I love to play off previous week
week. Oh,
high.
weekly.
Previous week's high.
Ooh, that's strong.
So that me knowing market loves to play a net zero type of game. It loves to most of the time, and I'm not gonna say all the time because like I said, I don't like to use the word always and never in
Oh
forex.
yeah.
But most of the
Sure.
time, net zero wise, it loves to end at a previous week high, previous week low, or makes a new high or makes a new low. Just because it's a zero sum game. So you see that they came down to this previous week's high, which was all of this right here, and they purged it, with this nice little wick right here that we got on the 30-minute that she was displaying earlier. They purged all this liquidity right here. So anybody that was in this trade right here, their positions got purged, and they could have held for sure. But 9 times out of 10, most is gonna get hurt by that. Um, and this is why I want to see Zig. What I was saying, I use it in intervals because I don't really like to do specific price points, even though my EMA sometimes allow me to do that. This EMA was specifically at 1730, but I like to gauge it. So for me, price points are key, but I love to put them in intervals, not to run in circles. So my interval was from 1720 to 1730, which was the cusp for a nice buy spot. And when I say cusp, I mean just like the sweet spot. Which for you, Zig, was when you was talking about your God zone and your golden zones, those was your cusps and your sweet spots.
Exactly.
For me, the intervals I love, like here is my intervals coming in between 1720 and 1730. I wanted to see a buy from those areas. Now, mind you, I still think we could. I'm a very patient trader. We may not come down to this, this liquidation zone next week, or we may. You know what I'm saying? One of my rules in the market. Let's go back to the psychology.
So on Sundays, you guys do breakdowns for the week, like predictions for the week.
Mm-hmm.
Yeah.
Yep. So going back to psychology rules. Right here. Here go my 5 pillars of the market, which I got from Mark Douglas from Trading in the Zone, which is a trading book. If anybody is looking for books to read about trading, definitely dig into Mark Douglas. First, be present with the market. You need to be present with the market. You need to have a clarity type state of mind. so you can see stuff clearly and objectively. That comes with being present. If you're present, you're here. You're objective, not subjective. When you're subjective, it leaves more room for you to manipulate yourself. But when you're objective, you're able to take in all perspectives and all possibilities, which in the market is key. Because if you don't, you'll be stubborn and stuck to your ego, which is being subjective. Number two, anything can happen in the market. That just goes down to, what I just said. Anything can happen in the market. Hey, we could see a technical, that say, boom, okay, we got an inverted head and shoulders. Let's buy. Whoop de whoop de whoop. But hey, it could be a hedge fund that's like, hey,
Mm-hmm.
let's print this inverted, head and shoulders, and let's dump this thing. Let's dump it.
I always say you should always have count three confirmations before you get
Mm.
in the trade.
Hey, I got that in my rules, Zig. Three to five
Confirmation.
confluences every trade
Yeah,
that you take.
three.
Facts.
If it's under three, you shouldn't be getting in.
Right, exactly. Because if it's under three, yeah, exactly what you say. You should not be getting in, at least in the way that we look at it. So, you know what I'm saying? Which I feel like is, I mean, if you're coming in trading, I mean, that just should be how you should look at it, anyways, because we are not the market. So,
Exactly.
we are participants.
Right.
So, rule, rule number three is you don't need to know what is going to happen next in order to make profits. You just need to put the odds in your favor. And long term, you will be consistently profitable as long as you are putting the odds in your favor based off of your plan. So that is rule number three. And that is basically what I wanted to hit right here. You do not need to know what is going to happen next to make profits. So, okay, I kind of lost my train of thought. So yeah, coming back here. That the reason why I say that, so that's one of my rules. So 1720, 1730 is my interval. I don't need to know if it's gonna come hit 1730 specifically. I'm just looking for an area that puts the odds in my favor. And for me, that was 1720 and 1730 because I know I can base my stop loss. I can base my stop loss at a real nice way if I get a certain technical entry. So I mean, I caught the buyout on gold in the stream on Friday. Did not participate in it. That was, just due
Quick
to
question about
what's
that
up.
indicator. So on that indicator, when does it show? Like, you know how there be some indicators that may not show. Like,
Okay, are you talking about Are you talking about that dotted line?
Yeah, so that's a weekly one, right?
Right. So it's gonna show. It's gonna show.
Like, how long was that there for?
This was there after the week finished. So after the week finishes, if let's say the week finishes at a certain spot, for the previous week, the week had finished. Okay, let's find this. We can actually look at the dates too.
You go to your weekly candle. I want to see on the weekly.
Oh yeah, most definitely. That's a good way to look at it. I like that perspective. I got a lot of annotation, so the weekly candle might be a little blurry. Let me take this off.
Yeah.
Okay. I like that. I like how you did that. All right, actually, let me mark where the previous week lows is first, and then we're gonna go back to the weekly chart. Okay, our previous week lows is right here. And let me make this a different color. So actually we can keep it white. We just know it's at 1733. Okay. So let's go to week. Okay. This is where it's at in the weekly candle. And I mean, let me just remove all drawings real quick. 1733. We know the price point of the previous week highs, 1730, 1733, something like right here. So this is what it would look like on a weekly candle right here, the previous week lows. And I mean, that's to me, I like this. I like how that look. But yeah.
You look at the weekly. Oh my gosh, gold is about to bust.
You feel me? Hey, Zick. Hey, I'm waiting for this buy and may go away type situation. We've been waiting for that.
Oh my gosh, gold is about to shoot up, bro.
Good buy and may go away.
Pin bar was serious.
A lot of big investors are even saying, like Warren Buffett, like everybody's saying gold's on its way back up to that 2000.
I agree, bro. Let's see the percentage of the retracement. I mean, we retrace what about 19.41% in the gold market? That's a healthy retracement. That's a
Ziggy,
healthy
can you
retracement.
put on your shit, bro? Excuse my language. On your gold chart, bro. Can you go on your weekly and do your fib and tell me where, like, on the retracement where she is right now?
Yeah.
I'm just curious.
I was actually gonna do that when I got off of here, but I'll do it right now. I never look at the weekly. I only look at weeklies on Sundays.
I feel you.
Well, I'm about to look right now.
Franco.
That's crazy, bro. Oh my gosh, that's crazy.
Talk to me, Zig.
Can I tell you guys something real quick that's crazy?
Please.
It's doing a depression slide, and I'll say depression slide. It did that. What does that mean?
Oh, so you saying we expecting them Bulls to take over here real soon?
Oh, Bulls. That means Bulls is coming right. Let me pull out my fib real quick. Hold on. I gotta see where. So I'll pull it right here. Here it is, right here. Yep. Perfect, man. I wish I could show you on my screen. Can I show you on my screen real quick?
Yeah. Franco.
Franklin. Franklin, we can't even hear you, bro. Your mic's muted, bro.
Right.
Man. Man.
Franklin, bro.
I don't think my mic is muted, bro. It keeps going out, bro. I don't know what's headset right now. It just keeps going out. So every time it go out, I just have to turn my phone's microphone on. So anytime y'all can't hear me, just let me know, and I'm gonna just switch it to my phone's microphone.
Bet. Hey, Frank, let Ziggy take the screen real quick.
Bet. Ziggy, you should be able to take the screen.
Bro, I'm not gonna lie to y'all. I'm about to catch this dip and go, and I'm about to just go crazy.
Man.
Okay, well, are you about to show us that weekly retracement on that fib, Zig?
Yeah, but it's crazy, bro.
Please,
okay, show me what you're talking about.
Please, because I know that mug look beautiful.
I'm gonna take a fib as well. I'm gonna just take. Well, I'll be taking mine from the swing high to swing low.
Can't see.
Oh, she on that guy zone.
She's in that guy zone. So this right here is what it's looking like. Man. Oh no, what am I doing?
Ziggy, she wicked off of my 618 zone. What about you?
Yep, 618.
Yep.
Look, this is my. So look, so. Oh my gosh! Let me show you how beautiful this. Let me show you how beautiful this is, man. So, if you look at here, if you look to the left, so the crazy thing about these charts is that this was already a zone before this was a 618. Right. This was not a 618 until this happened. Right?
Right.
But scratch this, scratch it falling down. This was already a strong zone just from here. It, it pushed up here.
Right.
And this was actually a 318 zone as well. Because look, this is just.
Talk to me nice.
Bro, great retracements.
Hold on. I'm gonna show y'all. Boom. 318. See that?
Mm-hmm.
So for me, this is a strong zone, man. This is about to easily hit 1840. Easily. Like I'm trading it to here easily. I'm gonna trade it. I'm not a long-term swinger.
But I have to be one of those for this one.
No, I'm not, just because it's gonna hit here and it's gonna hit here and then it's gonna go up. So for me, I'm gonna hit here, bag, hold. I mean, I'm gonna get out. I'm gonna wait for it to hit back here.
Double up.
Which is gonna hit this area right here.
Double up.
Yeah. And I'm getting in for the long run.
Yes, sir.
Facts, exactly. That buy and may go away.
Yeah.
Now
so,
that buying may go away.
Yeah.
That's gone. Ziggy can.
So
okay,
look,
go ahead.
For me, I am looking for another dip here, probably to here or maybe here.
Right.
Again, I don't know. Just whatever it happens. But I'm looking to trade it, man. If I could trade it from here to here, bro.
Lovely.
Yeah, it's lovely. Hey,
Bro,
family.
That's 1,000 pips, bro.
Yeah, that's good movers. Hey, family, let me share my screen real quick. Just a breakdown real quick on GJ on what I'm seeing, so we can wrap this up real quick.
My bad, Lamar. Before you share your screen, can I finish up this gold analysis for Friday?
My fault.
How do I take my screen off?
My fault, Frank.
You good, family? I'm finna wrap it up real quick. Hey, Lamar.
Yes, sir.
You know what we sliding off for right now,
bro? I'm I'm already
feeling real good.
It's
feeling real bubbly.
This gold about to be beautiful, man.
Thanks.
This gold about to be way too beautiful, bro.
You're a fool, man.
So you see that depression slide I was saying? That's a depression slide that I've seen that from Bitcoin.
So Zig, you took your fib from here, right? About right here.
No. I took my fib. Where you got it right there?
Or for your so okay, you just did the swing low to swing high type.
Yeah, swing low to swing high.
Okay, yeah, that's how I take my fibs too.
It hit my
618. Mm-hmm. It's 618 right here. So yeah, me already knowing, this is exactly why I have this zone right here. This is a weekly zone for me because I know this is a 618 zone. I've had that annotated on my chart for a minute now, probably since like August, because August is when we started breaking out of this, this zone and stuff and whatnot. But yeah, that was a great perspective that you offered on the weekly, bro. I appreciate that.
Yes, sir.
That was dope.
For sure.
But coming back to Friday. Okay. Here is previous week lows. Okay. Now I wanted to mention something. We was talking about tendencies and characteristics that pairs hold. For me, I know gold holds certain characteristics besides the whole integrating the time aspect. Now I want to integrate what type of retracements it made based off of its tendencies. So I know gold from my experience with gold, and I be hawking gold. Gold is one of my favorite pairs. Gold, if it's trending strong, it will make $10 retracements and shoot. Or sometimes it won't even make that. It'll just keep shooting. For example, like in here. It made like an $8 retracement and just shot. And that'd probably be the same for here. Okay. Now, that is a minor retracement in gold's trend. And then now, and I'm talking about like the weekly trend, by the way. A medium type of retracement will result in probably a $15 retracement in the gold market. And then what I like to call level 3 retracement, it's like $30. Gold likes to retrace that $30. Usually when gold retraces $30, it will typically end up bottoming out. It retracing $30 just to purge, a bunch of liquidity levels that it had going up. So, let's see how much this retrace from here. Actually, if we really want to be specific. Now, this is a $50 retracement, a monstrous retracement. So, coming back to that, This is beyond level 3, which is $30 to $40 retracement. This is a dang near $50 retracement in the matter of what? 22 hours, 3 sessions. So basically, gold loves to retrace in different varieties and fashion. But when you really look at her and you really been, participating with her and studying her, back testing her just alone. And sorry for y'all that's watching and I'm referring to gold as a her. That's just how we talk. You know what I'm saying? That's just how we talk. But
yo, I think you might mute.
Yep. Yeah, so going back to this, she just loves to give those type of retracement, loves the type of tendencies. So given that information, we come here, or this is how I like to do it. At the start of the week, I like to play my probabilities and see what type of retracements it could give or what it cannot give. You know what I'm saying? Because you always got to be adaptable. It could just truck. You know what I'm saying? And if that's the case, you got to be disciplined enough to just wait for your setup. No FOMO, JOMO only. Joy of missing out. You feel me? We never fearing of missing out because we know it's always going to come back.
Yes, sir.
So, you feel me? Yes, Ersky. So coming back to this, let's say prices right here. What's a $10 retracement for us? $10 retracement is specifically at that previous high.
That's crazy. So you only really all your risk to rewards, your risk is always 10 pips.
Not 10 pips, but
20. It was 20, right?
Maximum $10. So 100 pips.
$10 for it. Oh, 100.
Yeah, maximum. Yeah, you thought I was saying 10 pips?
Oh my goodness, no.
That's like 10 cents.
Man, I'm like this.
No, I don't get that crazy. I can't scale down to the 30-second chart if they, I think they probably do have it, but
you gotta pay.
I don't got it.
I can do it. You gotta pay extra.
Mm-hmm.
But
so, but yeah, $10 maximum.
So 100,
it really,
100, so 100 pip stop loss. You're in a trade for a while.
Mm-hmm.
It just depends on which session, though.
Yeah, exactly. So, it depends on which session. So that's why I love to integrate sessions.
I'm seeing that. Which I know that. It's just that, when you see it like this, it's totally different perspective.
100%. That's what we're here to offer, different perspectives. We all got different gems to offer. So, the reason why I like to take on sessions, because timing is
another question
really
about
key.
the chart. Is that an alligator, or are those just 4 different moving averages?
Oh, these are moving averages based off of banking systems. So, okay, me and my inner circle, we learn from a trader who learned from a trader who traded for banks and moved money for banks. And the EMAs that I use are, I don't use the 5 anymore, but I used to use the 5. It's now the 13 EMA, which is the red, the 50 EMA, which is the blue, the 200 EMA, which is the white EMA, and the 800 EMA, which is this dark green type of color that you see. Mm-hmm. So we call each one, the red is ketchup, the blue is water, okay, the white is mayo, and then this one we like to call it blueberry. So those EMAs, it's not based off the alligator system. I've heard of that alligator system just because I've seen it on YouTube, but yeah, this is nothing like that. But yeah, and y'all, for the ones that are watching that don't know what EMAs are exponential moving averages. So this 800 EMA is taking the average movement upon the last 800 candlesticks on the 30-minute chart or whatever chart time frame that I'm looking on. And the 200 EMA is last is offering data from the last 200 candles and so on and so forth, all the way to the 50 to the 13. So yeah, coming back into gold, going into next week, here's my mindset. What are the possibilities we can make a $10 retracement to previous week's high, which is this liquidity zone right here? What are the possibilities we can make a retracement to a $15 to $20 retracement based off of this liquidity zone right here?
I don't think it won't go that low.
You know what I mean? So that's 1720. And then what are the possibilities it could come clean this up? So me looking at it from that perspective.
What do you guys see gold going before it pushes up again?
To be honest,
it's going to make a higher high.
Trend,
next week it's going to make a higher high.
Right, exactly. So me, maximum, really now, since I see how the week ended, I still have that interval between 1720 and 1730 is a sweet spot for me. But 1730, if it comes down here and, we accumulate, like I said, coming back to
I like that 1730 price point around there.
Yeah, that 1730 is smooth.
So I'm catching that 1730 for 1,000 pips, man.
And that'll be lovely. You feel me?
Yeah,
and then that's when we just scale out our targets on a higher time frame.
That's gonna be a nice ride, boy.
Yeah, exactly. Because I mean, if it break all this and we in motion, then look where our 800 EMA is. This market structure right over here. This is where we target. So, this could turn into a possible swing, And if we don't fall off from here, you could target these areas too, But hey, it's all based off of probabilities. And then, Lamar, I'm about to let you share your screen. I just want to wrap up where I was coming from Friday, going back to where you asked. So, where I was coming from Friday. Okay, we talked about all week how we want to see gold come to the 1730 area. Me, I called out this trade, didn't take it, didn't execute upon it. From a conscious decision. I really don't like to get too crazy on Fridays.
Yeah.
But I will. But most of the time, I don't like to, you know what I'm saying? Just from my experience, I used to trade every day of the market. But, let me wrap this up quickly so Lamar got time to explain stuff. Coming through Friday.
Do your thing.
All right, bet, for sure. Coming in here Friday. This was the zone I was just looking at, just based off of this liquidity zone right here. So gold made a retracement at this 1760 level, which is a higher time frame point of interest for me. Then I would like to see it come to 1730. And if it came to 1730, I would like to see us bounce from 1730 because we just purged this liquidity, meaning we may have gas to start moving up again. In other words, you got a healthy trend. Healthy trend has retracement. Okay, y'all that are watching, the trend is not gonna just move straight up. It doesn't go like this. It goes like this. Sometimes it might go like this, just to go like this, So it's different varieties and different fashions. You got to understand that and be disciplined enough to accept retracements and to just trust your system. Man, they did not want to let me take this off. We'll leave it up for now. Anyways, coming back to Friday, not to get off topic. Why? Man, okay. Here we go. Come back to Friday. here's my entry signals right here on the lower time frame. So in the 15-minute, we have this. This is a bullish railroad pattern, candlestick pattern, which is the JCP. This is just an acronym from Japanese candlestick pattern. Okay. So we got this right here. And we're going to see what this looks like on the lower time frame. So let's scale it out. Okay, the 5-minute. We're just going to scale all the way to the 1. The 5-minute, this is a clean W. For those whose eyes are not trained to see advanced W's, here's what it looks like on the line chart. And I guarantee you that it looks like a W. Boom, boom, W.
Overhead and shoulder.
Right, inverted head and shoulders, in other words. So, yeah, we got that. And then, yeah, so this W. And then not only that, we have another bullish railroad pattern. And to me, this right here alone, just rejection and this strong push after this doji and this bearish candle, that's just imminent to me that we may start moving up. So for me, it's not quite a morning story, but it's a morning star for me. Just because we got that doji, we got that bearish candle, and then a bullish candle. They left wicks, but nonetheless, if those wicks were filled on these candles, it'd be a morning star. So for me, it still qualifies. And then we got another bullish JCP on the 5-minute. So that's coming down to the lower time frames and really dissecting these candles that are on the higher time frames that'll allow you to get a specific position. So coming down to the 1. So there, mind you, in this trade, there are already more than 3 confluences. We didn't even get into the EMA confluences, the session confluences, the type 3Ws, type 2Ws, type 1Ws. We didn't even get into all that, but it's there. Before you even get to the 1 minute, you probably got about like 10, 15 confluences on this trade. So coming to the 1 right here, this is how I would have scaled out my position if I took it. The reason I didn't take this position is because it didn't come back to this price point right here. And yes, it's, I guess like, yo, Franco, you could have just took it right here. But for me, if it didn't come right here, I didn't want it, especially because it was a Friday. So I'd rather just sit out. Because I know if I do that consistently enough, it'll pay out long term. Because I don't like to just look short term on a trade to trade basis. I love to look long term. So I do things consistently and once again in a systematic way, because that's just more optimal for long term results. So coming back in here, let's say, boom, here go your second leg of a W. Let's say, and then for my system, once the 13, the red EMA is broken and the candle closes above it, that's an entry. So boom, right here, here's an entry. Now and then this is what I wanted to show, how you can minimize your risk based off of coming to timeframes like the 1 or the 5. It really allows you to dissect this candle. So I know, boom, go had this last point of demand. Mind you, let's see where that 845 happened. 845, it made its last retracement. Boom, here's that last seal of demand. Now for me, if this trade comes, and I would have probably set my stop loss to be specific right here, just based off the 1 minute market structure. It would have been at the apex of this W. And when I say apex of the W, when you draw out a W, boom, boom, boom. This is an apex. apex, which is also a tipping point of belief. Okay, so there was people who sold here, and there was people who bought here. You know what I mean? So going back to knowing that the market is ran off of greed and fear and other emotions, have you will. That's how I come in approaching. How I like to approach my deputies. So I like to get in off the apex. So yeah, here would have been entry. And for me, if it would have broke this, or broke this, or broken this, the trade is just not ready, or it's not valid. It's gonna be one of the two. So honestly, my stops would have been set right here. A $3 stop loss. In other words, a 30 pip stop loss. And I would have scaled out my targets on the 15th. Now, my targets on the 15th, my first target is the London high. Going back to sessions, it's the London high. The London high is right here, which also matches up with this liquidation zone. So this would have been my checkpoint. But since it was Friday, it's the target. If it was like on a Monday or a Tuesday, I would have been looking for that to just be a checkpoint, to eventually, hit more lengthier TPs, because I like to just scale out my TPs based off of liquidity zones. This would have been TP1, and this would have been the checkpoint. But, it was a Friday. So let's say if I did take this trade, here's what your risk reward is looking like. Based off of just a 100 pip move in the market, based off of your creative efforts, you were almost able to make a 1 to 4 risk to reward, in the gold market, which goes a long way when you playing with hefty lots. So, I mean, and I know y'all can vouch for that. I know, Zig, you can too. But yeah, coming back to this, that was my approach on gold and why I wanted to see it buy in that current moment when I called out the buy before, it got all the way up here and before it had got down here. So that was some of the foresight, and then some of the things I was looking for to actually execute upon that trade.
Yes, sir.
But Lamar, I'm gonna start this Zoom over, so you got time.
No, bro, it's all good. It's all good. Let's wrap it up. I gotta drop Trey off.
Okay,
so Ziggy, bro, it was an honor to meet you, bro. And, you know what I'm saying? Happy trading to you. And let's keep growing, bro. Let's keep building,
Facts.
bro. Let's keep building.
Facts.
For sure.
I'm about to toast up to that one right there.
Yes, Sirski.
Yes, Sirski. Zig, bro, you're more than welcome anytime. Just so thank y'all for the ones that was tuning into this live stream. For the ones that's gonna, look back on this live stream and this great game, great songs from all these fellas, And yeah, I appreciate y'all. Make sure y'all like and share. Subscribe. And if it's anything else y'all want to see, let me know. You stuck with me this far. Appreciate you. And I'm out. Yes, Sirski.